Hello, everyone, and welcome back. Mix 1041. We're on mixtv.tv. And looky there, it's
Hey
Jay
there,
and
Steve.
Brittany Hagee.
Hey.
Good to see you.
Alon Planning Partners. Guys, how are you?
We're doing great today.
Wonderful. Especially with the topic we brought today.
Well,
so
and thank you for that.
Yeah.
But we're going to talk taxes. But, hey, and we kid about it, the whole death and taxes thing,
Yeah.
the whole tax law is going to be there.
Yeah.
But, my goodness, is it important, especially in what you do?
Well, here's the thing. Everybody hears the word taxes and they're like, ugh, they freeze up or what a drudgery. But here's why talking taxes is so good. Because when you actually tax plan, you get to save more money. More money stays in your pocket.
Mm-hmm.
I mean, that sounds pretty good to me.
That's good
I mean,
news.
if I can keep more in my pocket than having to give it over in taxes, I want to know how to do that. Like, I want to keep that. So
That's right.
we can take a topic like that feels heavy and drudgery and boring, but this is why it's important, because it means you can keep
Well,
more.
and why having an advisor that talks taxes is so important is because you can either do tax paying or tax planning.
Mm-hmm.
So if you're every year just trying to meet with a CPA or one person that's trying to give you a tax advice for that minute, like there's only so much that can happen, right?
You have to do that.
You have
That's
to
an
do,
important
but
part.
you have to do a 5-year, 10-year plan when it
Yes.
comes to taxes too, so that you can truly tax plan and not just tax pay. We all want to save money on taxes. Nobody wants to overpay Uncle Sam, right? But so the only way to really get around that is to have a longer term tax plan involved. And so that is a key component of a true financial plan. So anytime we're helping folks with their investments or their allocations, one of the big cornerstones is, okay, how do we make sure we minimize those taxes? Because every dollar I can save a client on taxes is a dollar I don't have to put back at risk, over risk, I would say, to try to earn back, because we get to keep it in their pocket. There again, Warren Buffett's number one rule is do not lose money on purpose, because we want to make sure that every dollar, it's not about what you make, it's about what you keep. Because if we just give it all away, you can make $1 million a year and lose $1.1 million and be broke, through taxes and through overspending and through allocation choices, right?
And if you're not optimizing your efficiency on the tax side, who cares what you're making? If
That's
if
true.
they're counteracting each other, doesn't matter what your return is or what
That's right.
you've got to really take both hand in hand.
And Steve, you probably know this, but we're still under the lowest tax brackets we've had in over 40 years, decades, right?
right.
The 2017 Tax
Yeah.
Cuts and Jobs Act has given us lower taxes, and folks really need to take advantage of this, because taxes are on sale right now. They need to take advantage of it between now and the end of 2025 when this sunsets, because we're in an election year, unless
Yeah, I
anyone
heard.
knew that.
Have you noticed?
Didn't know that.
Heard something about that.
So who knows where we're headed? But I will tell you this: we know the tax rates right now, and we know that if nothing happens and these aren't extended, that come 2026, we are going to have much higher tax rates. So let's do some planning before we get to that point to say, how do we have some taxes and get to some taxes on discount now instead of giving Uncle Sam way more later. So that's why efficient tax planning is really important for everyone.
And it really is about a balance of wanting to create multiple buckets of savings for retirement. So diversification is not just about asset allocation and how you're positioned. Diversification also includes tax statuses, because what you want to do is create different buckets of money with different tax statuses for later in life when you need to create some income. Because you don't want all of your funds coming from tax deferred accounts where you're going to have to pay taxes on every penny you're withdrawing. Because think about 5, 10, 15, 20 years from now what tax rates might be. That's a big unknown, big question mark, but we can all guess they're probably going up. So
if we keep spending like we are right now, $34 trillion in debt. I mean, it's unbelievable.
yeah.
Wow.
So if you have two buckets, tax deferred, where yes, you have to pay taxes when you withdraw them, because that provides some benefit now, but also balanced with these
Tax-free.
tax-free accounts. For example, like a Roth IRA. You pay the tax up front when you put the contribution in, but then that investment grows tax-free, the principal and the growth. You can withdraw all of that tax-free. So if you have both of those buckets at the point of retirement where you're drawing income from those, that really helps your tax bill. come that tax time
Yep.
in retirement. So those are the kinds of things to look at, not just now, not just the current year's taxes, tax paying, but how is this investment going to impact me in 5 years, in 10 years, in 20 years, and what's the tax implication there?
You mentioned Warren Buffett, and by the way, we're joined with by Jay and Brittany Hagee, Alon Planning Partners. One thing that Warren says is talking about having a plan. And talking about, and you look at successful people, and we all see them in the news or whatever, or even know people that are successful. I think one common thing would be, it ain't just a here and now. It is having a
Absolutely.
plan. Is
It's
that
not
right?
by accident.
It's the old adage, failing to plan is planning to fail.
That's right.
If you're just kind of haphazard about this and say, I'm putting away in a retirement vehicle, and when I get to retirement, I'll figure it out. The government will figure it out for you. And that's
right.
what
That's right.
that's what tax paying looks like. We want to do tax planning, especially if you're within that 5 to 10 year window of retirement, or you're already retired. Most people that we meet with have qualified plans, meaning they're tax deferred. Things like IRAs, 401ks, 403bs, and that's great that you're putting away into those accounts. You should be putting away into those accounts, but not doing tax planning on those, you're going to give a unreasonable portion to the government if we don't set those up in what Brittany just talked about, having some in a tax deferred account and some in a tax free account. There's many ways to do that. Roth conversions is one of them. You may have heard of that. But a lot of folks, and it's not for everyone, but you need to meet with the planner and see if it's a part of your plan so that we can say, okay, how do we get some of these tax-deferred dollars into tax-free buckets so that you're not paying taxes on things like required minimum distributions. When the government comes to your door and knocks at 73 and says, hey, we've let you defer these taxes for long enough, you're going to give us some money now.
Yeah.
We need to make sure that we've got a plan in place before we get there to where we're not devastated by that number, right? Because if all of our money, like Brittany said, is in one bucket, a tax-deferred bucket, we could get hurt by taxes in the future. So we have CPAs in our office. We work with CPAs of our clients. We need to plan with your tax professional, and we need to plan with you to make sure that it's not just how much am I paying in taxes this year, but it's how am I saving on taxes this year and years to come.
And if you're a small business owner, listen
up.
yeah, this is for you. There are so many additional tax benefits and strategies available to small business owners that are really impactful in the overall financial picture of folks and families. So if that is you, we'd love to sit down and talk with you and share some of those things with you, how you can save when it comes to taxes, which means that you can put more back into your business, right? You can put more into your financial future and saving and preparing. It gives you more to work with so that you don't have to continue to earn more.
Yeah.
You don't have to grow. So there's just a lot of benefits available. It's worth the conversation, which of course is what we offer to our listeners.
Yeah, and the last thing I want to say, guys, if you're listening, don't wait till April 15th to call us.
Please.
Yeah, we can't do
Yeah.
that. Don't wait till October 15th if you're filing an extension. Call us now, because we can plan now ahead of time. It's hard once you spill the milk, it's hard to clean it up, and try to drink it, right? So you have to make sure that we're planning ahead. So call us today on taxes. Let's don't wait until you're actually looking to file taxes in April. And that number is 423-315-1441. Again, 423-315-1441. Don't let taxes keep you up at night. We've got a plan for you.
And AlonPlanning.com. Planning is in their name. Alon Planning Partners, Jay and Brittany Hagee. Well, thank you very much. It's a great conversation. They have so much knowledge and so many advantages to make your life and your future better. Again, as Jay said, 423-315-1441 or AlonPlanning.com. Guys, great to see you.
Thank you,
Me
Steve.
too.
Thanks for having us.
Thanks, Steve.
Investment advisory services are offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor's situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or is excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.